Okay, testing. 1, 2, 3, 1, 2, 3. The Wayne in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Good morning, everybody. Testing. 1, 2, 3. Yeah, looks like it's working. Very nice. Welcome to Trade Non-Farm Payrolls Live at FX Street. This is the 179th month that I've been doing this webinar, and you're like, wait, that's like 15 years, Wayne. Oh, I know, right? Oh, for sure. So anyways, very cool to hang out with you guys for 15 years here at FX Street just for this one webinar. Now, I have been doing webinars at FX Street for longer than that, but for this one particular one we call Non-Farm Payrolls Live. Very cool. So thank you for being here. Is anyone been to more than 100 of these webinars? How many people have been to more than 100? I've been to most of them. Oh wait, I've been to all of them. Yeah. Yeah. Although thinking back, I think David Pegler might have done one of the live streams for me. I think maybe I was doing the Series 3 exam or something like that. I think there was one. I think I've done 178 of them. I think somewhere in there David Pegler covered for me, which is awesome. Can't see me yet? Well, I can see you, Stephen. You dress like that? Really? So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, 179 months ago, this is what I said. I said, welcome to FX Street's Trade Non-Farm Payroll Live. The purpose of this webinar is education. This is not an alert service. I am not here to make trade recommendations. However, I will conduct technical and fundamental analysis throughout this New York trading session with the overriding goal of helping you put together trade plans. Trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So that is word for word what I said 79 months ago, and it's still true today. By the way, my name is Wayne. So you haven't had anything since then? All right. Okay. Well, we'll go with that. Looks like for some reason it reset itself. All right. I guess I can start over. My name is Wayne McDonell. I am a currency trader. I'm just like you. Been sitting here every single day trying to improve, trying to sharpen my saw. You know, trading money is not that difficult, right? Like we buy and sell, how difficult it is. Well, all you have to do is know everything and then accurately predict the future every single day. Yeah, so everything else is pretty straightforward. So, before as a currency trader, you might have seen me in magazines or in newspapers in regards to high-tech startup financing. That was my gig as a Silicon Valley entrepreneur and venture capitalist. Before that, I was in the nonprofit world. So there's sort of my background. I also worked for NASA for a couple of years. I just kind of saved that one, presses the chicks. Hey, man. I used to work at NASA. So, very cool. So, what I want to cover today is technical analysis, fundamental analysis. We'll probably do some bond yield stuff. That's what's on people's mind. 2 weeks ago it was Bitcoin. Now it's bond yields, and then they'll be chasing some other thing around the corner. So we'll talk about whatever's hot today. Feel free to ask questions. Make sure you click the like button, by the way. I'm going to give you at least 2 hours. I might not be able to do the full 3 hours today. So, but I certainly can do two plus. So if you can click the like button, that's pretty cool. I don't think most webinars, are not 3 hours long at FX Street. It's the double negative thing I always have trouble with. Oh, I'm covering up Traders Way logos, covering up FX Street logo. So I'll move that around out of respect. All right, so yes, ask questions, get involved. I'd like to thank you for being here, especially those that have been to more than 100. Basic rules of engagement here. Treat other people in the chat with dignity and respect. This is our profession. You're in my office. If you're a spammer, we're not interested in your garbage. If you're a heckler, grow up. And everything else, everything else is fair game regarding to being an investor, being a trader. We can talk about scalping, spot trading, swing trading, position trading, carry trading. I tend not to do cross pairs much, but I focus mostly on majors directly. I have longer term points of view based on macroeconomics. I have 2 degrees related to trading. 1 degree is in finance and economics. When the finance one is a master's degree, and it's focused on management of finance. Excuse me. The second one is in my undergraduate is in macroeconomics. Cool. So I know a few things there officially. So, and yes, I have passed the Series 3. So there's all kinds of questions that you may ask, and I'll do my best to answer them. I really will. And of course, thank FX Street for being a host. For me, for probably more like 17 years, I've been working with the team at FX Street. So make sure you thank them by becoming a subscriber here on their YouTube channel and all that kind of stuff, and maybe even visiting fxstreet.com. Okay, okie dokie. That's just yesterday's meeting. All right, let's start here. Okay, a couple of things going on right now. The market is freaking out a little bit as we rotate into new types of investments. People need new ways of making money, and that typically happens this time of year. So this activity that you're reading about and seeing about, we expect it actually. Fine. So we could talk about that. We can talk about the rising bond yield in the middle and end of the curve, right? The back end of the curve, the long end of the curve. And we could talk about the concern about the Fed getting involved, and if so, how would that work? What would they do to get involved? How would that impact our markets? So there's a lot of stuff that we can add to today's webinar. Ultimately, this is Trade Non-Farm Payrolls Live, which means we are likely to get an economic release. And the interesting thing about that is bad will probably be good and good will probably be bad. So it's a behavioral finance thing going on. And of course, we can talk about that if you want. Ultimately, you're the boss. I'm just a humble currency trader. Cool. Do you want to talk about the number? One of the messages that I share with all y'all on a regular basis that if it's not common sense, it's trash. Okay? If you're going to be a trader and investor, a decision maker, then the decisions will be made on logic. You'll analyze, right? You'll analyze economic data. and then you'll make a common sense decision. If the cusp of your trading decisions are because you're measuring a pattern like this and then another pattern like that, and then you said, well, the angle of this is 37 degrees, so this has got to be that, and so now I guess I have to buy because of something like that. Well, good luck with that. Instead, we should look at common sense and say, well, what would traders, investors do in a world where, like, for example, why do interest rates go up? Why would they want them to go up? Why would they not want them to go up? The much bigger decisions. So let's talk about common sense, and we'll get that out of the way. Because nobody likes the common sense conversation. I don't know why. Right? But check this out. Did anything happen in February that could have a negative impact on non-farm payrolls? To make non-farm payrolls off trend? See, typically, you're always going to be on trend because that's what a trend is. So if the trend for non-farm payrolls is steadily increasing, you're going to have a standard deviation below and a standard deviation above, but most things should be kind of around the trend because that's what the average is. It's the average of these things. But every once in a while, you'll work your way down here or up here. So why would non-farm payrolls be low today? What happened in February that would make non-farm payrolls headline number come out less than the average of the trend of non-farm payrolls? Yeah, well, that's in the trend, right? That's in the trend. We've been trending that for a year, so it wouldn't be COVID. It's not COVID related. We already have that trend in the data. What happened in February in the United States of America that would impact job creation or create job loss that would be not in the trend? AKA, it's either brand new or it's a one-off. Sort of a black swan exogenous shock. By the way, if you're thinking about it and you just don't really know, type in a question mark so I know that your ears are on. Remember, common sense. No. Stimulus, no. That would make it above trend. I'm literally saying below trend now. Below trend. There you go. On has it. Yeah. A cold weather, not just in Texas, but all of Texas was shut down in February. I don't think there was an election in February. Okay? No. There was a polar vortex that went from Chicago, right, all the way down to Fort Worth. And then it moved towards New York and Boston. It got fairly cold in Georgia, but not terribly cold. But like Texas shut down. The entire energy system collapsed. All power went out in many of the major cities. So people literally couldn't go to work. Does that add jobs or destroy jobs on a short run basis? As soon as the waitress could start working at Applebee's again, boom, Applebee's is shut down because there's no power. Okay? And then there's also some seasonal adjustments. If you look at how the Fed, the Bureau of Labor Statistics, the way they do their seasonality, I think, impacts March as well. So the trend has been very positive for non-farm payrolls for quite some time. That is the trend. Okay? And we will be below trend today. Just so you know. There you go. Does that seem like common sense? People didn't get jobs because they didn't have job interviews, because the job interviews were canceled because the power was out. So they deferred hiring. Does that make sense? Like, sorry, dude, we were going to hire you today, but the office is closed because there's no power. We want to hire you. We're going to hire you. Let's how about let's meet up again in a couple of weeks. Short-term noise. All economic data is short-term noise. What we want to trade is macroeconomic trends. So this NFP, last NFP, next NFP is news, but it is noise news because what we want to look at is a trend in such economic data, not one individual data point within the data set. Okay? So like, let's say NFP looked like this. I'm just making up some numbers, right? Okay, these are all NFPs. Okay. Slowly but surely getting better. So are we trading this? Are we trading this? Are we trading this? Like, what is it that we trade? Well, there's a couple of things to look at here. If you did an average, so if you calculated the mean, we're doing this. Okay? So this is generally what we're doing. And yeah, you could say this is above expectations, this is below expectations. But if you calculated how low a low is relative to the trend when you get a low, you'll say, well, the standard deviation below the mean tends to be X number. And then the standard deviation above the mean tends to be an X number. And then you find out, oh, well, this is expected high in these conditions, and expected low in these conditions, and those are fine. And then every once in a while you might get something like way down here, and it's below the standard deviation, so it's an outlier, and you're like, okay, well, that's going to be revised, and it'll be revised up, so we'll get into here in the future. Okay, so you basically ignore that. So where's the money maker here? Well, the trend in non-farm payrolls is rising. Okay. Does anyone know what day I said I was officially a US dollar bear? There's an exact day, an exact hour, an exact minute of my declaration. That, my friend, is fundamental analysis. And I said I would sell the dollar for 5 years. Because I'm looking at this data and I'm anticipating the trend in the data. I don't care about any individual data set. No, it wasn't a March Fed meeting. It was, I believe it was April 9th. Okay, but somewhere around there. So almost exactly 1 year ago. Okay, and that's fundamentals. So 1 year ago, I said, that's it. I got what I need. My scorecard is checked off. I got them all now. I got a complete scorecard. So, yeah, sell the dollar every day for 5 years. Okay. Stevie says June. I think it was before June, but certainly June. I mean, I know it was before June because the June Fed meeting is a day to take profit. So we were already taking profit on the U.S. dollar declaration, if you will. So it was several months before that. All right. Cool. So anyways, there you go. So it was about a year. And that's how I look at non-farm payroll. So today we're going to get another data point within our data set. Okay. And the trend has been up, but that's what I've been trading for a year. The expectation of an upward sloping, right? So what we look at is the M is the rise over the run, right? Okay, rise over run is what this is. So that's slope. So I trading that slope, okay? Now remember at the time I said, look, there's no economic data that points to this, nor is there any technical analysis that will tell you it. There was no technical analysis, no economic data. but the decision was clear. And that's what fundamentals is, right? Okay? So this is the important part. So now if we're going to look at a data point coming out today, it won't likely change the trend, but based on things like seasonal adjustments, and more obvious than that, because how many people even follow seasonal adjustments to Bureau of Labor Statistics calculations, right? Nobody, right? But how many people knew there was a polar vortex that lasted 2 weeks in the United States last year? Right? Ron came back to Georgia for crying out loud. Okay? So we're going to get a poor number today, and it doesn't matter. It just doesn't matter. It doesn't matter. It's not going to change the Fed policy. It's not going to change the trend. The people on TV might freak out. And, oh, my God, it's the end of the world. Oh, see, it's the bond yields. It's the bond yields that created it. And all of it's nonsense, of course. So I'm glad to be here, maybe to shed some real light on what is actually happening in the world. Okay, most of what you read and see on TV is wrong. Sorry. All right, cool. So that's that. So let's take a look at where we are in the world. The U.S. dollar is generally strong right now, and the yen has been up and down, which is kind of interesting because I would have expected a little more yen strength than we got. We only had some yen strength that 3-day period. Yes, we will do gold, guys. We will do gold. Don't worry about that. Okay. So yen is, interestingly weak. Money is not flowing to JGBs as much as I would have liked. The Fed stuff, this makes sense to me. This doesn't make sense. All right, great. Canadian dollar strong. Cool. Okay. APAC suffering. Europe doing weak to nothing. And pound, right? So you'll notice that a lot of this has been happening for a while. Euro's been meh. Pound has been Australia's been doing all right, but New Zealand has not. CAD is benefiting from the oil prices, right? Swissy's been decoupled. Dollar should be strong this time of year, and yen should be strong this time of year. So here's the interesting thing. It's such a mixed bag that I recommend in the next week or two to be patient, disciplined, and conservative. Okay. Cool. So dollars ripper strong, and yeah, we knew that was going to happen. Isn't that cool? Weeks and weeks ago. So that's very nice. It makes me very happy. Why do I have it set up this way? Must have been messing around. What do we got here? Oh, yeah. The lower. Yeah, this is interesting. I don't want to cover it, though. Let's do it differently. So, we're going to get... Oh, that's what's going on. Window vertical. All right, so today we got non-farm payrolls. And the news is going to come out, and we will get some volatility. And honestly, I think you should probably be more careful on this non-farm payrolls than other non-farm payrolls. And I always tell you to be conservative. The reason for it is I think some people are going to be shocked that the number is below expectations. Maybe even negative. Negative. What if it comes out negative? Not just not as high. They're like, oh, only 100,000? What if it comes out negative 100,000, right? That is going to freak people out because they're not adjusting their model to reality. They're leaving reality and asking the model to tell them what to do. The model doesn't know anything about bad weather, so it doesn't have it priced in. So it could be shocking to some. But also, we're in this conundrum of the market sentiment right now is quite worried about 10-year and 30-year bond yields. And they believe this is some sort of sign. And of course, I could easily explain what really is happening. And by the way, if you listen to Jay Powell, so he just did his testimony, yesterday? I mean, he's very clear in his explanations. Okay. Oh, the mic is too high? It's funny. I've had mic problems where it hasn't been working well. So I'll drop that down. Hopefully that's better. Thank you for the feedback about the feedback. So anyways, Jay Powell's been very clear on what he and the Fed are going to do, and yet the market debates about what the Fed means and what the Fed's going to do. And then they're betting against the Fed, and then they're betting on the Fed, and everyone's betting. Okay? You were listening to him? So they do tell you, oh, now it's 2 week? Okay, now I bumped it up. So everyone's betting, and yet if you just listen, they tell you. Okay? They tell you. It's pretty simple. They tell you. So we can talk about what it means, but my fear today is a really bad number will be misinterpreted. Or even let's say the number comes out as expected, I think it would be misinterpreted. And also if it came out better than expected, I think there's a good chance today things will be misinterpreted. So a really good number will force the Fed to get back involved and taper or increase their purchases or something. And I think you're going to get a choppy response today because I don't think there's a cohesive strategy that the entire market is looking to do. Okay? Or at least a giant majority. I think pigs are going to get slaughtered today. If you're a bull, there'll be be a bull. If you're a bear, be a bear. I think there's going to be a lot of pigs today. Dumb money doing dumb things because they're overreacting emotionally to information that is readily available and easily translated if you know a lick of economics. Okay? So it shouldn't be complicated, but it doesn't mean it won't be complicated. So be careful today, right? Am I going to tell you to buy or sell? Well, let me tell you right now. Let's get this out of the way. Let me get rid of some of the indicators so it's not so complicated. Let me get rid of these. Let's do it that way. All right. You ready? I think the Euro USD will be higher at the end of the year. Okay? So if you want to sell at support, do it. I would never. Okay? But the interesting thing is we expected this downward move to happen starting January 1st. I guess it's this one here. Okay. So do you think it's doing this? Then you're a bear and you're going to set those trades up on a smaller time frame. Even if you're a bear, though, I don't think selling here is a good idea. I think a bear is going to want something like this over the next month. Okay? If you're a bull, you're at support. So over the next 2 or 3 weeks, you want to find some stability here. And if you get it, you're going to think that. Okay? Simple. If you don't know which one, stop trading. You're not on the clue train. Okay? I made my declaration a year ago, so you should already know my answer. Okay? So, right? Put it this way. I'm a bear on the US dollar, but I knew the US dollar would get strong in January and March. Okay? Okay? In my live trading group, about 5 weeks ago, I handed out pieces of paper that showed things like seasonality, and I showed everybody there that the euro dollar is going to be coming down right around the beginning of March. 5 weeks early, I'm like, get ready. There's nothing on your chart that says dollar's going to get strong, but it's going to get strong. How many people were in that meeting where I literally said, here it is, download it, print it out? It's not strong now. There's no technical reason for it. There's not even a fundamental reason for it. But it will get strong, and then the people on TV will tell you it's for some reason that, of course, is not the reason, because I'm telling you 5 weeks before it happens that it's going to happen. Here it is, print it out. And there will always be a reason. Last year, it was, well, we bombed an Iraqi general. I'm like, okay, great. The whole entire market moved because we killed a bad guy. Okay. Okay. You know, the world is a pretty violent place. Okay? Yeah. So anyways, what I'm trying to say is this is the normal mechanism of the market. And if you're a bull, you need to be patient. And if you're a bear, you're getting to profit targeting soon. If not this week, next week. Cool. Now, the issue is if you don't know that and you walk into this webinar and you're like, so are we buying or selling today? You don't even understand how the market works. It's amazing. It's just like, wow. But you don't know if you're a bull or a bear. Why don't you tell me to be a bull or a bear? Okay. I will teach you how to make the decision. Okay. Anyway, so that's that. So we'll get some news today. And my concern is it's likely to be volatile. Some people are going to interpret it as bullish. Others will be bearish. And then the bears will turn bullish and the bulls will turn bearish because they're making sloppy decisions to begin with. So they're going to be sloppy traders. And I think it could get messy. I actually hope the dollar strengthens so that I can sell it next week. Think of that logic. I hope the US dollar gets strong so I can sell it. Okay? So it looks like, what, at least a dozen people here attended that meeting. Okay? Let me say it a third time. I hope the US dollar gets strong today. I don't even care why. It doesn't matter to me. I've already done my fundamental analysis. So if you're saying, well, it's the increase in COVID shots. No, wait, it's a decrease in COVID shots. No, wait, it's this other thing. Oh, it's what Nancy Pelosi said. Oh, it's what Trump said that he's going to do something again. And oh, wait, we're not talking about Trump anymore. It's going to be the other guy. And oh, wait, it's something. And you'll notice that most people are just lost. I did my work, and I know what I'm going to do. And my world is quite quiet. Cool. So anyways. So we'll look at dollar pairs today. We'll look at yen pairs today. Yeah, Borat said so. I think I drew this yesterday. Look at that. Very nice. It worked out. Look at that. Interesting. Yeah, who was it? Some new guy said, thanks to me, he got his first 100 pip trade. And I'm like, 100 pips on pound yen? I'm like, that's nothing. Don't be shocked if it all goes away. Look at it, went all the way. It's just like, what an amazing learning experience that guy had. Hopefully he takes it as the right way and not just say, well, that's why I do short-term trading, and he goes back to that. So, right? Very interesting. Yeah, Richard or somebody. Yeah. Anyways, he was cool, though. He was cool about it. I mean, wasn't he the guy that said he got whipsawed on pound yen? And I'm like, what do you mean whipsawed? You buy it here and you exit here. What? What do you mean whipsawed, right? And I went into like an hour tirade about what do you mean whipsawed in it? How do you get whipsawed in a trend? Well, I have a 3-pip stop on a 5-pip spread. Oh, well, that would do it. Yeah, but he was cool about it, though. I appreciated him. Was that right, Daniel? Very cool. All right, so yeah, so we'll do some yen trading today. Really, most of these are set up for next week. So it really comes down to like for example, on Kiwi, we know Kiwi is quite weak, and we expect some yen strength. So you could be selling Kiwi yen, which is currently a counter trend. And if you are in that boat, you would have done this probably Wednesday or Thursday. So here it is Friday. Already you've missed next week's trade. And the only thing you could really do over the next, 12 hours of trading or something would be something like this. Okay? So Thursday is the best trade. Monday or Tuesday would be the next one if you're a bear. Okay? And now when we were up here, there obviously is no reason to be a bear except for we expect Japanese yen to get strong because of fiscal year end in Japan. Learned a lot. Cool, right on. Yeah, I mean, look, as a coach, I mean, obviously I've been doing this coaching now for more than 15 years. I must be in my 17th year now of sharing my knowledge. And it's easiest when you have an uptrend or a downtrend, right? Because I can coach you to buy a dip and teach you how all the technicals and fundamentals and, oh, look at the pivot point. Oh, look at the swing trade setup. Oh, look at the position. And, and everything's golden because we're in a trend. And I expect the trend to remain. It's the situations that I'm preparing you like in here for a total reversal and then mediocrity for a while, and then either a collapse in trend or a resumption of trend. And most of you guys miss the obvious moves, get excited about the big move, miss the collapse, so now you've given all the money back, and then you buy and sell like crazy when nothing is likely to happen. And you take massive losses and you say things like, man, I got whipsawed in there. Whipsawed? Nothing happened, okay? And then, of course, you don't have any dry powder left when the trade resumes. So it's tougher for me as a coach to keep you calm and focused in periods when not a lot is likely to happen. Not meaning not a lot trend-wise, but yeah, a lot like collapses like this, okay? Okay? But this is the big March collapse. I expect March to do something like this. But of course, I don't know exactly the price it will resume or the time. But I know it should be before March 15th. And the other thing, but it doesn't have to, but this is what's in my mind. And the other thing is Kiwi's probably going to be the last one I go long on. Okay. Okay. So 888 Forex has learned a lot in that. Those are the difficult ones to coach because it's easier just to, I mean, amateurs think it's going to continue, right? And so the fact that I have to prepare you for the out and then prepare you for the sideways, and then keep you focused on your long term, it's a difficult one. Yeah, for sure. All right, so we'll do some yen-yens. Okay, we'll do some yen-yens, all that kind of stuff. Guess I'll put it back on euro. Oh, euro. And how do you want to look at it? You can do this one. Oh, right on. Well, I know you've been around for a while, 888 Forex, so I'm glad I was able to contribute. Jim says Sam went broke. Why would Sam go broke? Why is Kiwi so weak right now? I don't know. You'll have to do some research. Forex Pipper, have you been watching dairy prices? Have you been watching Chinese economic data? Did you notice yesterday that they're going to add stimulus? Okay. So if Chinese economic data is poor or less than expected or less than desired, that would hint at why New Zealand would not be doing as well as you'd want. Okay. Ricky's like, or they're still in lockdown, or all these things. Yeah. Remember, it's not a mystery. It shouldn't be a mystery of why something is strong or why something is weak. But right? Well, the news hasn't come out, Surfing, so there's nothing to talk about yet, but I could do gold for you while we wait. Okay? But don't forget, like, the most important economic release of the entire month is coming out in just over 10 minutes. I don't have a bias on gold. Gold is just another asset class, but gold priced in dollars will be higher at the end of the year. Okay? But that's not necessarily a gold play. That's a dollar play. Okay? Okay. So right now, I want gold to go up, and I do not have market conditions on this time frame to buy, so I wait. Okay. Now, if I was a bear, I would look at it this way. So I go to my templates, I go swing trading bearish bias. Okay. And it tells me, like, for example, on Thursday of last week, I would have sold here. On Thursday of last week, you would have sold, and now we're on Friday of this week, and you're already through your aggressive target. So you're done. You probably took profit yesterday on a Thursday. And you're like, oh, we got Non-Farm Payrolls tomorrow. I don't need to be in this. Right? And you work 1 hour a week. Where's the aggressive target? This thing that says bearish profit zone aggressive. So you would have sold up here around 18 last week, and last week your target was 17.25. Okay? You might have just said, from 18 to 17. That's your call. Okay? Cool. Would you like to know next week's sell zone? How many people would like next week's sell zone? They're pivot points, Alex. Okay? But you don't have to be a rocket surgeon to sell a retracement back to a psych level. I mean, that's the thing. If you're a gold trader and you breached a psych level and then you come back, I mean, once again, that's as basic as it gets. So this doesn't have to be pivot points. I don't give a damn about pivot points that way. I mean, this is logic. You're in a downtrend. It rallied up. Sell the lower high off a psych level. Like, what more do you possibly need as a bear? Nothing. Okay? Great. So if we add a little more time here, okay, you're going to look at this area. Now, the interesting thing is, on Thursday, you already had that opportunity. Oh, of course, Alex. Yeah. Yeah, you would never do anything without price action. Okay? Remember, it's not the indicator. It's just how to trade. Okay? So it looks like there are people here that want to buy gold, which is fine. I hope they're right. I hope they make money. I don't give a damn. But if I was a buyer of gold, I'd want to at least see a higher high, higher low. But before I trade against a trend, I like to see a reversal pattern, like a double bottom, higher high, higher low, and then I might be a buyer in here. So those people can do it. Whoever wants to buy gold, by all means, you should do it if that's what you want. I don't think that, you might be a good investor and you're buying this because you like the psych level of 1700 and you plan on being in it for a while. But anything other than that, you're a degenerate gambler. So all I could do is say, hey, man, hope you're right. I would never do something so ridiculous. But if you're going to do it, I don't wish you ill will. But you don't know how to trade. That's quite factual. Okay. But I'd never want to play Texas Hold'em against you either. You're gonna go all in on 2 jacks. Like, you're a queen 4 all in, right? You just love it. But be very careful. Okay? Because what you're talking about is degenerate gambling. So I just do what you got to do, son. Do what you got to do. Hope you put a lot of thought into it. Okay. Buy one position every month all year. No, not really. Well, sort of, Robin. Robin, if you're going to do it that way, I got to keep my eye on the prize here. If you're going to do it that way, what did you say, once a week or once a month? Once a month. So let me do bullish buying here. Once a month, like you had an opportunity here as a bull, but you after about 5 or 6 weeks you got knocked out. Then you had another one here, and after 3 or 4 weeks you got knocked out and never got an opportunity here. Or maybe you tried the front run and then for a week or two and then you got knocked out. Maybe. I don't know. It seems like it's just not a bullish market at the moment, right? Like, what kind of person buys a lower low in a downtrend? I've always wondered. Right? Right? Like, I've always wondered, like, who the hell buys a lower low in a downtrend? Now, I assume most of it is profit taking. So whoever's going to buy it at 17 is really hunting the stops and stuff like that. But I don't want to get into that conversation. But ultimately, I think it would be very foolish to buy lower lows. Now, you'll say, well, Wayne, it ends up doing this. Yeah, well, if you're going to do that, at least you can buy a dip and not a drop. There's a difference. Okay? So, I don't like risk, so I wouldn't take a risk like that. I just wouldn't. I wouldn't. I couldn't. I don't think it even... I don't think I could even conceive of the plan. I filtered it all out. Okay? My oh my, WTI. Hitting targets here. Okay? 382. Well, I guess it's a 50%, but Anyways, 1618, very interesting. Thank you to OPEC for these moves. Some of us watched the OPEC meeting live. Okay? The Russians asked to sell more oil, and they were denied. Oil goes up. Cool. Thank you, OPEC, for making it easy for us to trade energy. All right, so let me get tradethenews.com so that we can get the number quickly while I do 9 other things as well. So let me open that up. No, new window.
You're listening to Trade the News.
I don't know if that's sound.
Just a few minutes on the hour in our jobs data for the U.S.
Now I know.
February non-farm payrolls expected at 200,000. The prior was 49,000. Private payrolls expected 200,000 as well. Manufacturing payrolls expected 15,000. Unemployment rate expected to remain at 6.3%.
So remember, they expect 200,000. Remember, they is stupid. Not trade the news. Let's not trade the news.
You're listening to Trade the News.
Expected to remain at 61.4%. We'll get trade balance data for the U.S. and Canada at the bottom of the hour. U.S. trade balance for January expected minus 67.5 billion. Canada international merchandise trade expected at minus 1.4 billion.
It's going to be low. It's going to be bad. Zero. No jobs added. Yeah, who are they anyways? Well, these are experts, I suppose, and they're asked what they think NFP is. And what the vast majority of them do is a model like I taught you guys on FX Street. So I wrote a very detailed article on how to create a model. I think it was called How to Trade the Employment Situational Report and whatever, and some tips and tricks. But anyway, so you create a model and you gather your data. So you create a data set of all the headline non-farm payrolls, and you do like the trend in non-farm payrolls and all this kind of stuff. And you look at some high frequency data like ISM, services, subcomponents of employment, and the Challenger Christmas and Gray report for mass layoffs and whatever. And you pop all of that in, but you understand the average is not going to be average this time. I mean, maybe it is. I don't know what the number is, but I don't expect average this time because of, what's the word, inclement weather? So I think it'll be lower than expected, not what the model says, because the model doesn't understand the entire power grid in Texas went down.
90 seconds to our data.
It snowed in Texas, y'all.
200,000.
WTF.
Unemployment expected to remain at 6.3%. Hourly earnings seen at 0.2% month over month, 5.3% year over year. Weekly hours seen at 34.9%, and labor force participation expected at 61.4%. In U.S. trade balance for January expected minus 67.5 billion. Canada trade for January expected minus 1.4 billion. About a minute now to our data. Non-farm payrolls, once again expected 200,000. Unemployment rate expected to remain at 6.3%.
We've done the full Monty anyways. R1 to S1. So I hope it gets strong so I can sell it next week. Please let you know what the market's going to do.
US payroll
Tony, you don't pay me enough
data
money.
in just a few seconds.
I can make the decision, but if you want me to be daddy, you got to pay me.
This trade balance 68.2 billion.
That's good.
379,000 for payrolls, 379,000.
Oh, it came out the opposite.
6.2% unemployment.
It came out unbelievably hot.
Private payrolls at 465,000, 200,000 expected. Hourly earnings at 0.2% and 5.3% are in line with expectation. Weekly hours
Wonder how they
dropping to
did that.
34.6. It's lower than the 34.9 expected. Participation rate unchanged at 61.4%.
I wonder how they got that.
Again, trade balance minus 68.2 billion versus minus 67.5
So,
billion.
good news across the board, y'all.
Canada,
Trade balance is
1.4
good.
billion versus minus 1.4 billion expected. The payroll data back month revised higher to 166,000 from 49,000.
Wow, even the revision's good. Wow.
Early earnings back month revised downward 1/10 month-over-month and year-over-year.
Wow, that's interesting, huh? Okay, so good news across the board. Last NFP was like 50,000. They jacked that up by 100,000.
Back to 1.6% on this better than expected payrolls data on the back month revision higher.
Yeah. All right, let me turn him up. So last month revised up by 200%. Like, what? So that's pretty amazing. Headline number 380. So who the heck is hiring? Not Texas. Okay, that's interesting. So who is doing it? So you got to remember the polar vortex went from like Chicago all the way down to Texas. It was snowing in Texas, and then it moved its way to like Boston, New York. It snowed. They got lots and lots of snow. Things were shut down for a few days. Vaccines couldn't get out. It was terrible. It took 4 days to get stuff on Amazon, right? So we all suffered. So who's are they all in California? Are these all high tech jobs? Like, where do you get the numbers? So it's interesting. You have to realize, too, that they use fuzzy logic. They ask 20,000 people or even 12,000 people, and from that they extrapolate the data for an economy of 380 million people. So either the number's wrong or someone is hiring like crazy, some place in the United States that's not Northeast and Central. So it's what, Alabama or California, right? Like, wow, it's kind of interesting. So that's red hot. Okay, and it's not for me to say if it's right or wrong. The number is the number. So we can go through this. Small businesses hiring like crazy. Okay, so that's interesting. That's good. But why didn't we see that in ADP? So there's something weird here. Like ADP was meh, and NFP was red hot. But, and you know, like ADP, for example, let's talk math here for a second. ADP is a payroll processing company. So they cut checks for companies that are large enough that want someone to do payroll for them, but not large enough to have their own payroll department. Okay? Okay. Well, okay. Well, let me finish this, Greg, and then I'll answer that question. So ADP literally counts the number of checks they sent out. And we can do the change of, well, Jim, I already told you. I want the dollar to get strong so I can sell it next week. So I already told you all this. All right. So ADP literally just counts the checks. And you can count the change of checks. Did the number of checks they sent out go up or down? And we know it's companies probably of like 3-4 employees all the way up to a couple hundred employees. At some point, ADP wouldn't be a value proposition if you could just have your own employee do it all, right? So at some point when you hit like 200, you might just get your own payroll people, right? All right, well, Jim, the other people didn't, but anyways. So that's like we know that's a solid number. And then NFP is fuzzy logic. There's two surveys, the establishment survey, the household survey. They do small sample sizes, add some fuzzy logic and some magical math, and they come out with the number. And so it's just interesting, like, who did they call to get such an amazing number? And why wasn't ADP along with that ride? Because ADP, so going back to this now, ADP, this one. Okay, 465,000 jobs. Okay. And if they were small businesses, we would have seen a red hot ADP, but we didn't. So anyways, that's curious. The other thing I talked about here was the trade balance was quite good. 68.2 versus 67.5. So that's good. Okay. This on the long run is what I'm trading. Okay, let me tell you what that is. You ready? GDP. Let me get the right color here. Okay. GDP is equal to C plus I plus G plus exports minus imports. Okay? That's the equation. So when we're looking at trade balance, we're looking at net X. Okay? Exports minus imports right now are equal to negative 68 billion. Which means, yes, the United States exported a lot, but we imported more, so it's a negative number. So we look at this and plus negative 68 billion. Okay? See, GDP is actually priced in dollars, so you can do it this way. Okay? So what I'm saying is, I'm a currency trader, and on the long run, a trend of negative net exports leads to negative US dollars. And we expected 67, but we got 68. So it's even more negative than what the average would indicate, right? So it's getting more negative more quickly, which tells me on the long run, I should be a bear on US dollar. By the way, I am a bear on US dollar. So what I said just 15 minutes ago is I hope the dollar gets strong, which means euro dollar down, because I want to sell the dollar. I want it to get overvalued as much as possible, and then I want to sell. So I'm happy this is going down the other way. Now, let's go back to the other question. Why, Greg says, why is the dollar getting strong? Okay, I said 6 weeks ago and 36 weeks ago and 122 weeks ago that at the beginning of March you should expect US dollar strength, and that there'll be some reason for it, and there'll be some explanation for it, and all the talking heads will tell you it's for some logical reason. Right now they're telling you it's the rise in long end yields. And they're arguing that foreigners are deciding they should just buy U.S. Treasuries because they want to earn 1.5% on the 10-year T-note. And therefore the dollar's strong. Okay, to some degree that's probably true. But it wouldn't be true if I could tell you 6 months ago, well before any rise in interest rates, before any expectation of rise in interest rates, that this was going to happen this time of year. So again, like what I said about an hour ago, is 5 weeks ago I got together with my live trading group. Oh, and I gave out, and I said, I did something like this. Let's let's see. I did something like this. Okay. I said, here's a chart, okay? And this is where we're going to be. And then after that, it's going to go up, 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 up. So expect right in here, dollar strength. 5 weeks ago, handed it out. Print this out. Put it on your wall, I told people. Put it on your wall. Even though the dollar has been weakening, especially against like the pound, right? Even though we were in like this mode, I said, yeah, we'll get ready to sell it. So Greg's like, so why is the dollar getting strong, even with this great news? You're going to hear 9 or 10 or 12 different, if you watch these TVs behind me and you turn the sound on, you'll hear all kinds of experts tell you why. And all of it is probably somewhat true, but not completely true. Here's the answer. It's supposed to. Is it the bond yields? Yeah, partially. Is it the stock market's overvalued? Yeah, partially. Is it foreigners buying treasuries? Yeah, partially. Is it the end of the world? Is it all over? Should I dump my entire stock portfolio and blah, 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 blah? No. So, this is falling because it's supposed to. I will be buying it in the next 1 to 2 to 3 weeks. There you go. There's my alpha. I expected it to fall. It is falling. And in 2 or 3 weeks, I'll be buying it. And when we meet for Trade Non-Farm Payrolls Live 180, I'm certain I'll be showing you how this went from dollar strong to dollar weak. And we had talked about it, and I told you it was going to happen. And I'm like, see, look, it happened. Okay? Be ready for it, by the way. Be ready for it. It will happen, according to my research. Okay? Members only, Theo. Members only. All right. So let's take a look. People are demanding gold. I just showed you gold, but why don't we do it again? Okay. I just declared that I wouldn't even have considered the opportunity to buy this thing. How low will it go? Well, this is a timing issue more than a price. I think it'll go as low as it wants. At what point will the dollar weaken? And I've already answered that. Okay? So, Robin, when did I say I was going to look to sell the US dollar? Oh, no, Jim, first of all, next week don't log in an hour late. You're missing entire conversations, Jim. Okay? I've been a bear on US dollar since April 9th. And I said I would be a bear for 5 years. What I expected inside of that, Jim, right, is profit taking in January and repatriation flows in March. After which I will resume my long-term dollar short trading. Okay? So no, I don't trade a weekly chart. No. Okay? Okay? So in this case, the dollar will likely weaken in the next couple of weeks. At least as we go through the next couple of weeks, I will get more serious at looking at opportunities. Okay? Right, no, but I mean this conversation, Jim. So you're misinterpreting what I'm saying, at least by the way I'm reading your comments, because you missed the first part. So you're misinterpreting the second part of my conversation. Okay, it's already been declared. I've been a bear for a year on US dollar. So right now the dollar's getting strong. It's not surprising. It's not the end of the world. It's not necessarily what all the experts on TV are telling you. They're partially true, of course. But ultimately, gold versus US dollar is likely to head up pretty soon. But I'll wait. Okay? Yeah, Jamie, the central bank told us, literally came out and said, we are not going to cut interest rates to negative. That was it. Okay? Which is another way of saying will not, and the not is the change in policy, buy more bonds. Okay? Now, this is equal to bond market peak. He just said that's the top of the bond market. We just hit a price ceiling. Actually, I think technically it's a floor because you can't, but anyways, that the bond market cannot go any higher. Okay? Okay? That's the key to who asked it again? Jaime, right? That's what led to it. So now, since that day when I declared that I'm a dollar bear for the next 5 years, so I'm making quite a statement. I'm also telling you that is the top of the bond market. And by that, now you have to say, well, what is that equal to? From there, interest rates will start rising. Okay? So since that day, not only has the US dollar gotten weaker, generally speaking, interest rates in the United States on the 10-year T-note have gone up, not by 100%, because that would only be from 0.5 to 1, but now we're up to 1.5. So interest rates in the United States have risen 200% since that day. And now you're going to say, well, Wayne, with interest rates going up, isn't the dollar supposed to get strong? No. No, it's not. In fact, just look at what happened since April of last year. The dollar fell and interest rates went up 200%. So what do you mean? So now what you're hearing is, look at the interest rate interest rates have skyrocketed and the dollar's getting strong because of that. And it's not 100% true. In fact, it's not even 50% true. And what I'm saying is stay with your long-term vision. You've done your work. Okay? You've made your decisions. And at some point, soon, most likely, the dollar weakness will resume. Okay? And ultimately, this has to do with taxation flows in the United States and Japan. This is a good time for rotation, sector rotation. There's a lot going on, okay? But it's amazing how, like in a webinar like this, where people are buying gold right now, I'm like, what's wrong with you? Right? Like, I don't understand. Why would you do it? It's clearly a downtrend and has the capacity of being a downtrend as much as 4 weeks more. And it's made a lower low. why would you and then right, like, and then why would you buy it? Like, why would you buy it now? Like, why would you buy it? I don't understand. Like, why would you even think of it? I don't get it. Well, it's 1700. That's as much thought you put into it. That's it. You're going to buy it because it's 1700. That's your plan. That's your full plan. Well, if you're right, I'm going to catch it later. I don't think you're right, but if you are, I'll catch it later with significantly less risk and no degenerate gambling. Okay? Okay? No, I don't use indicators, Jim. Okay? I use macroeconomic analysis. I don't even need a chart. Why would you even need a chart? Okay? Using technical analysis gets you better entries and helps you manage your risk better. They're mostly entry and risk management tools. Yeah, price action. Well, yeah, price action. Well, price action is more than just the entry. So let's kind of do this. Okay. So what we mean by price action is how price works. Okay. This is a trend: lower lows and lower highs. Therefore, you can anticipate this move and this move if you simply believe this is a downtrend. Okay. So price action is a leading indicator. So I'm a bear on US dollar, which means if there are buyers of gold and the dollar is weak, then this should be trending upward. So the first part of price action is, this made a lower low. Should I buy it? No. This has made another lower low. Should I buy it? No. This has made a new lower low. Should I buy it? No. This has made a higher high. Should I buy it? Yeah, okay. So the first thing is, what are the market conditions? Okay. In my book, Strategic and Tactical Forex Trading, I start with strategy. Is the market bullish, bearish, or neutral? Okay. That's the first part of price action. Is this bullish or bearish? It's bearish. So why the hell would you buy it? What are you, nuts? Right? Why would you buy a downtrend? I just don't get it. You're like, well, Wayne, it's only a downtrend on a 1 hour. Okay, I'm cool with that. I'm totally cool with that. But before I can do this, before this reverses, I should be able to be patient and disciplined enough to confirm it with a reversal pattern. Before it reverses, it should probably give you a reversal pattern. And once the price action gives you a reversal pattern in the direction of your long-term analysis, which you might have gotten on your weekly chart, then you're still going to drop into a smaller time frame and say, ah ha 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 ha! That's what I'm looking for. That's the thing I've been waiting for. There's the reversal. I'm going to buy a dip, not a drop. And then you go long and you get rich and fat and happy. Right? You're old and rich, fat and happy, and beautiful people are attracted to you even though you're fat and old. Okay? 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 There is no buying in there at the moment. Okay? Cool. All right. Let's take a look at the dollar across the board. Okay. We have this set up bearishly. This week's aggressive target is 137.93. 1.3793. Okay. Isn't that nice? Okay, to say it again, over a week ago, our analysis told us that the bearish market would drop to 1.3793. Holy smokes, that's nice and accurate. Nice. Okay. Yeah. What's it doing? Oh, let's move it that way. Do 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 do. I can remember everything. Can't tell what's true or dreams. It's not measured quite right, quite right, quite right. There's the conservative target anyways. Boo, 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 boo. I covered COT a week ago. It showed Aussie dollar was going up, but nobody was buying the Aussie dollar, for example. It's not a pitchfork, it's standard deviation. I just measured this. What I did was I measured one standard deviation above and below, and then projected it out and showed you how pivot points work to predict the M1. Okay. Okay. But it's not a pitchfork. Yeah. Just profit taking. Well, let me zoom in. Oh, you mean on the Aussie? Well, the data doesn't tell you why. But yes, it has more to do with the US dollar falling. Okay, key motion. So what do we know? Aussie is priced in dollar. Aussie dollars are priced in US dollars because the currency pair is Aussie dollars in terms of US dollars. How many US dollars is an Aussie dollar worth? Okay, and now COT, Commitment of Traders Report, is done by the Commodities Futures Trading Commission, the CFTC, and what they do is they gather statistics from the futures exchanges and say, all right, how many open contracts do you have for long Aussie dollar futures? And how many open contracts do you have for short Aussie dollar future contracts? And then from that they can calculate the change in longs, the change in shorts. So now you have sort of a relative change, then you have a trend in change, a trend in longs and shorts. Okay, we're looking at all of that. But these futures contracts that the CFTC measure on futures trading exchanges, they're all priced in US dollars because they're American exchanges. So one of the things is because Aussie is in terms of USD, and there's actually been almost no change in bears or bulls in the Aussie dollar in weeks, like months, like 2 months, I think. But yet the Australian dollar has gone way up in Forex. So how is that possible if there's no new buyers? Well, the dollar weakened. And that's my whole play. That's been my whole play all year. Okay? All year I've either been selling the dollar or selling the yen. So Aussie dollar in terms of Aussie dollar hasn't changed. Aussie dollar in terms of gold will have changed, but maybe not the same way as Aussie. Aussie dollar versus Bitcoin, Aussie dollar versus Euro, Aussie dollar versus pound. They've all changed relative to in relative terms to something, right? But the dollar simply is weakened, which has pushed Aussie USD up. So we're right back there to the issue of Aussie dollar's up, but nobody's buying the Aussie dollar. Wayne, when trading spot Forex, are you a swing trader or longer objective? Well, I'm a macro trend trader, so I swing in position, right? So sometimes I'm in a trade for, 6 months, 4 months, 3 months. Not typically longer than that because of seasonality issues. There's times to hold them and times to fold them. Okay. But I'm a macroeconomic trend trader. So right now, I understand the dollar's strong, but that's a seasonal issue. And I'm about to plant seeds so that I can harvest a crop at the end of the year, if that makes sense to you, Jimmy. I'm about to plant, seeds. I'm about to plant some seeds. Wink, wink, nudge, nudge. And over the next few weeks, I'll get my crop in the field. I'll pray for good weather, and I'll harvest at the end of the year. Yeah, all right, good. So for those that are like saying, hey, thanks for that stuff with COT, it makes sense. Well, everything I'm going to teach you today and then throughout our relationship is going to be based on common sense. Jeffrey liked that one. You're so fat and so old you can't even get in your Lambo. You can get in the Murcielago, but you can't get out of it. And the Aventador, forget about it. Too old, too fat. You just kind of sit on the hood waiting for chicks to walk by. Who's the fat old guy on the car? I don't know, but he's rich. Doesn't completely work, but yeah. You can be fit too, Daniel. Oh, Daniel's so young, so naive. Okay. Well, this idea of the gamble, the holding your hand till the end of the year. No, you have to understand, if you've been doing this for a while, it becomes routine. This is what I'm trying to teach you. This is all routine. Every year there's something new to talk about, and they're all freaking out about something, but every year it's nonsense, and I don't even listen to these TVs. I just do it because I'm lonely, and it's nice to have faces in your office while you're working. But ultimately, this is much more like being a farmer, not a gambler. Where every year it's generally the same, but every year it's different. So, in the winter, it's not a good time to plant. The fields are covered in snow. It's cold. Okay. But sometime, I don't know, April, May-ish, the snow melts, and you hope that your fields aren't filled with puddles, and you hope it snows in the winter, but you don't want it to snow too much in the winter. And you want it to slowly melt, not all melt in one day and then refreeze, or melt all one day and have giant fields, have a lake for a field. So you know when it's likely to melt, but there's variables. You need enough snow, but not too much snow. You want it to melt, but not too quickly. But you want it to melt fairly early, but not too early. So, yeah, somewhere around, I don't know, the second week of April, you're going to till your field and pull out the stones that have popped up and get ready to plant. And also, by May 15th, you're going to need to buy crop insurance. But you're not going to buy the crop insurance until you plant your seeds. And you probably need to front run the planting of the seeds by ordering the seeds from the grain elevator or whatever, the seed providers. So you gotta have to have all this kind of planned out, right? And you know how to plan these things out because there's a process. So maybe in the winter you should maintain your tractors and your combines and, all this kind of stuff. So when you get to May, your machines are in good mechanical order. You have seed ready to go. You've already tilled the field, and you plant some seed. Great. Now you need rain, but not too much rain. You need sun, but not too much sun. You're going to need pesticide and fertilizer, but hopefully not too much of either. So now you're worried about bad weather. What if there's a tornado? What if there's a flood? What if there's a fire? What if there's grasshoppers? Once again, every year is slightly different, and you're going to have to adjust. And then somewhere, I don't know, the second week of September, maybe as late as the second week of October, you're going to harvest. And so you need your combine in good working order. You're probably going to need to get laborers from somewhere. Your grain trucks need to be in good order. Your augers and your storage facilities need to be prepped and ready to go. So you've planned for all of this in advance. And somewhere in that period, you're going to determine, now we put the combines in the field and we go to harvest. And then guess what? In the winter, it'll probably snow, and you'll spend most of your day drinking coffee, smoking cigarettes, bitching about the government, and watching hockey games. And now you just learned how to be a farmer. It's the same every year, but every year is different. And you might say, well, that's a contrast or a conundrum or a paradox, but one of my favorite books is by a German author named Hermann Hesse, who wrote about the story of Siddhartha, who finds enlightenment and becomes the first Buddha, right? Buddha Gautama, you might know. Anyways, there's this idea where he's finding his enlightenment, and he's sitting by the river, and he's listening to the river laughing. It's the sound of the river over the stones as it goes by. And he looks at it, and the river is always the same. It flows every day. It's just the water is going by, and it's the same river. And then he puts his hand in the water, and the drops of water fall off of his fingers back into the river, and they're always different drops. The river is always the same, but it's always different. Trading is very similar. It's always the same, but every year it's different. And you need to look at what you do in a skilled way like a farmer, where your skill is, it's not how to drive the tractor and how to do a straight row of seed, but it's how do you deal with the variables. Is now the right time to till? Is now the right, should you use pesticide? Which pesticide? How much pesticide? Or should you go organic? Should you plant this field or should you rotate the field? These are the things that make you a better farmer. The other stuff's fairly straightforward, but most people don't get even that far. Okay? So I want you to think like Forex is not about being in battle. It's not a war. It's not a zero-sum game. I've learned over the years, so like I wrote my book, I don't know, 15 years ago, 14 years ago. Things have changed. So in there, I do talk about it being a zero-sum war. I have matured a bit, and now I look at it as a symbiotic dance, where if I'm a bull, there are clear times when I get my turn to make money. And then there are clear times where I should take my money and leave the table. And now the bears have their turn. And they make their money doing what bears will do. And then they will have their opportunity to take profit and my opportunity to return and make money as a bull again. And it's a dance. One step forward, one step back. Right? Left, left, right, right, back. Left, left, right, right, back. Left, left, right, right, back. Okay? And if you do it right, nobody gets their toes stepped on. Everybody has a good time. And then there's you. You're coming in, stepping on everybody's toes. And you make no friends on the dance floor. Who the heck is that guy? You just stepped on my baby's shoes. Okay? Thank you, Ronnie. Okay? Cool. Nice rebound here. Nice rebound. Isn't that nice? I wanted the dollar to get strong so I could sell it. By the way, I know I wasn't right when I said the number was going to be bad. It came out ripper hot. I understand my logic on the bad. I don't understand the logic of the good number, but that's okay. I don't have to understand. But my plan is I want it to get strong to get weak. I also discussed that traders are going to be choppy because they're going to misinterpret the data and they're not even certain what they want to do. So, right, we're likely to get choppiness. And right now, it's straight down, straight up. Like for Euro, for example. Isn't that interesting? So I can argue right now, nothing has happened. Okay? Thank you, Forex. Cool. This is a 15-minute chart. Okay? So if it decides to turn bullish, which I'm not, I don't know if it's going to do that yet, I will make that determination next week, and maybe I'll have that opportunity next week, or even the week after. Okay? If I'm going to be long the next 36 weeks, I don't have to be the first one into the trade. Do you understand that? I do not have to be the first one in this trade. So if I'm going to be long 36 weeks, why not 34 weeks? Does it really matter that much? Can I wait for the market to actually turn bullish before I trade? Yeah, I can do that. Okay. Trend, and it's going to head down. And it's going to continue heading down until it stops heading down. That's the safe way of thinking about it. That's clearly a sell zone. People will sell it. This will fall over and over and over again until it stops. So like we had the big drop, a high. Okay, technically it's still bearish as long as we're below this number. Okay? And what happened was we got caught in a range, which is fine. But the way to trade a range is let it break out. All right, this is supposed to be blue. Let it break out. Let it retrace. We call this a roll reversal. And then they're going to sell it. It will drop one more time, at least. My job is to say, well, that doesn't change my outlook for the dollar. So I wait. And I wait until the market conditions have changed. the fundamentals have not changed. Just market conditions, market sentiment, market timing, what other people are doing. So at some point, if it's like this, yeah, I'll probably buy it here. And I will keep buying it, and I'll be aggressively bullish. But right now, this is technically down. That's what technical analysis is telling us. So I wait. I don't have to do a thing. I don't have to do anything. Jeffrey, I haven't actually read a book on Forex. Okay, when I first started trading, Amazon.com was a tiny, brand new online bookstore. The first books I looked for regards to Forex trading was Barnes and Noble. I got my car and I drove to the Stevens Creek Barnes and Noble in San Jose / Santa Clara. And they didn't have anything except Forex Made Easy. So then I went to the Stanford bookstore on the Stanford University campus in Palo Alto. Actually, right before that, there's another Barnes & Noble in an old movie theater right there on Palo Alto Avenue, in Palo Alto. University Avenue in Palo Alto. I went there, and then there wasn't anything there either. So then I went to I went over to the university bookstore, and they had some textbooks or something, but it wasn't quite what I was looking for. So there were no books. So I did look on Amazon.com. All they sold was books. Some of you guys don't even know this history. You're like, what? Amazon.com was a bookstore? Yeah, that's all it was. It was an online version of Barnes & Noble. So anyways, the only thing they had was Forex Made Easy. So I never ended up reading a Forex book. I've been trading longer. Okay? So, yeah, sorry. I haven't even read my book all the way through. Okay. So, which is another way of saying everything I do is self-taught. So I might do things different than other people. I don't know what other people do. The first Forex conference I'd ever been to, I was a keynote speaker. So, I mean, the only thing I had was FX Street. Okay? And it was before webinars. Okay? So one of the first webinars ever to be held on FX Street was Trade Non-Farm Payrolls Live #1. 178 months ago. It was one of the first webinars held by FX Street. Amazing, right? I'm like, you know what? I'm just going to show my charts in the live market during the craziest time for trading. NFP. Cool. So with that in mind, please make sure you click the thumbs up button and tell YouTube that FX Street has quality content. Does NFP only affect US dollar? No. Directly, yes. Indirectly, it's a sign of global macroeconomic activity because the United States is the largest, most mature economy in the world. So, I mean, 70% of the U.S. activity is domestic, but we do a lot of stuff globally. So, if the United States is healthy, the rest of the world should be doing all right. So, yes. Okay. Does it only affect the United States? No, only in an economic model where you make it a closed economy. But we're not a closed economy. So if the United States is doing well, and we're moving to full employment, so we should be at 5% unemployment by the end of the year, and that will be the new full employment. So when we're at full employment, anyone that is capable of getting a job or wants a job will have a job. Some people will be between jobs, and that's okay. That's a natural level of unemployment. It'll be perfectly healthy. So 5% unemployment. People will just be graduating from college. Some people will be changing careers. Some people will be in between jobs. But anyone that wants to look for a job for a few weeks will be able to get a job. When we're at that level, this impacts things like household income and the wealth effect. And what that shows is if you are making decent money, but more importantly, you expect to be making decent money in the future, or even better money in the future, this will increase how rich you feel and your willingness to spend, which then drives up consumption, right? Which will lead to, Chinese economic expansion. Because as consumption in the United States goes up because of the wealth effect, they'll be buying more crap from China, and so therefore Chinese factories have to be humming along near capacity. So you want to look at Chinese capacity utilization statistics, which they release monthly. And then you want to pay attention to stockpiles of natural resources from China. So just 2 weeks ago in my live trading group, we got together and I showed the stockpile of things like coal and gold and copper and what China was buying and stuff, right? And so when those inventories are dwindled, they're going to have to buy more from commodity producing countries. So Australia, South Africa, so on and so forth, okay? Canada. And those economies will benefit. Why? Why the circle of life? Well, we started with simply the U.S. moving back towards full employment. Full employment creating income. Increase in income, increase in consumption. Increase of consumption, increase in imports. Increase in imports, increase in factory capacity and utilization in China. As those statistics go up, the demand for natural resources will go up, pushing up the value of the US dollar and the Canadian dollar and the South African rand, as those currencies are purchased to therefore convert into natural resources like iron ore, coal, copper, wheat, beef, diamonds. And then they're brought back to the purchaser, which is foreign exchange. Okay? The circle of life. Yeah. And then you make money. That's correct. Badidi says, are you insinuating, sir, that gold USD is on a sell? No, I'm telling you that technical analysis indicates that the market is technically bearish on a reasonable time frame, meaning over the last several weeks. Technically. I'm not even making an opinion. Technically, it's bearish. And if I am fundamentally a bullish, then I'd be a fool to buy it. I only buy in uptrends. I'm a long-term macroeconomic trend trader. The trend is down, I'm a buyer, so I'm out. And when the market technically is bullish, I will buy like a crazy fool. Fire for effect. Okay? But I'm not going to be aggressive until I'm certain to win. When I have the advantage, I will attack like a vicious dog, a junkyard dog, foaming at the mouth. and without mercy. So, bears that get in my way will die, and pigs will get slaughtered, and I have no mercy. Okay? Because it's my job. That's what I do. That's what the Wayne do. Fibonacci. Okay. Let's do some Fibby. Fibby. Can't you see? Let's do some Fibby. Let's back this up. Oh, I didn't mean to do that. Okay, let's try this. I'll clear this out. Clear. What do I want to do here? How about like simple? Okay, Fibonacci fits in with a couple of things. You'll find all these things end up being very similar. You have Fibonacci. You have Elliott wave. And you have price action. And they're very much related. Price action is the basic, most obvious. Elliott wave is, in my opinion, too structured and doesn't fit my entrepreneurial personality. I would never want to count waves. I would never tell you, well, I think this is a fourth wave, so the fifth wave has to do this. No, it can do whatever it wants. Okay? And then Fibonacci, to me, it's these things too, but Fibonacci can be very subjective because it just, again, kind of like Elliott wave, it just depends on how you measure it. And you can maybe argue, well, Wayne, you do the same thing with price action. I'm like, dude, I'm not arguing with you. I'm just telling you my point of view. I like price action. These other things, too subjective, and too many times I've heard Elliott wave people say, oh, well, I miscounted. Well, yeah, then you lost money. Like, what do you mean you miscounted? Oh, well, it's a three wave, not a ABC. You're like, oh my God, whatever, dude. All right, so what do they do? Fibonacci is the question. Fibonacci, okay, let's talk about an uptrend. An uptrend is a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Okay? Great. This is what we call an uptrend. Fibonacci is telling you what kind of deal you're getting. You have to be a bull in an uptrend. And therefore, what you're measuring with Fibonacci is the distance between the top and bottom. Okay? And what Fibonacci tells you is if it retraces a little bit, there's lots of bulls. Now, by the way, Fibonacci wasn't a trader. Fibonacci was the guy that said if you take a guitar string, okay, and you put your finger right here, okay, so let's do the guitar. So there's a neck, right, and there's a hole here. Oh, it's supposed to be black. And there's a hole here, right, and then the guitar, whatever you think about the guitar, okay. All right, and the neck looks like this, okay? All right, and then the strings. So let's say you put your finger halfway between the top of the strings and the hole, and well, the bottom of it, okay? Right in half. He will tell you you're going to, first of all, make the note 1 octave higher, because the strings are vibrating at twice the speed. You can change the note by changing, because effectively you've made the string half as long. Okay, so he did the math. the frequency, if you will. Okay. By the way, if someone's selling you a bunch of crap about how trees grow and sea stars grow and coral grows and the skin of a pineapple, and they're like, look at the skin of a pineapple, see, it's Fibonacci, it's the golden ratio, you should buy my course, I'll make you rich. It's the dumbest thing ever contrived by a scam artist. It's ridiculous. But I suppose if you're desperate, you're like, well, I believe in the law of nature, so what he must say must be true. It's ridiculous. But whatever. What we're talking about now is the frequency of this wave. Think of it as a sound wave. Okay? So, Fibonacci tells you you get a deal. Now, the numbers, they say you can have a 382 retracement, meaning the distance from the top to the bottom. That's what makes it a retracement. Up, retrace, up, retrace. 382, 50%, which actually isn't a fib number, or 618. Okay? And they'll tell you, this is the magic ratio, the golden ratio, the harmony of the universe. Really? Okay? Because I can tell you, if I taught you how to trade and I called it the Wayne McDonell method, and I say 33%, 55%, and 66%, they're not even congruent with each other. You'll still make money, just as much. So this is actually nonsense. If it gives you strength because you believe the black magic, the voodoo of it all makes it work out, so you're like, well, I can't mess with the voodoo. The voodoo says this, so I do it. Well, as long as you do the right thing, you'll make money. The numbers don't matter. There's the golden ratio is a math trick. But here's the thing. Do you think this is an uptrend? Yes. Okay, great. What is a universal truth of buying an uptrend? Do you want to buy an uptrend or sell an uptrend? Well, you want to buy an uptrend. Great. The second thing, what did you know when you were 4 years old? Do you buy high or do you buy low? Please answer this question. If you don't know, type in a question mark. If you believe this is an uptrend and you want to buy it, do you want to buy a high price or do you want to buy a low price? What did you know when you were 4 years old about trading? It's probably the one thing that everybody on this planet knows. You want to buy low. So that begs a question, how low? Do you want to buy a lower low? No. That's too low. Do you want to buy a double bottom? No. That could be a reversal pattern. Well, how would you like to buy a retracement somewhere in this price area? Somewhere a 38.2 retracement, 38.2 discount from the previous high? You're like, yeah, if you're aggressive. And if you're aggressive, if the market is aggressive, it'll probably go a little higher because everybody on the planet is bullish, including you. Now, if it came all the way down to 618, it's still bullish. It had to come down a little further to convince some bulls that it's a deal. And they're like, well, I'm not so sure, but it's a deal. I mean, dude, you got a 62% discount. Come on. Are you going to buy it or not? Get in the game. You're like, okay, I'll buy it. Okay, boom, and you're in the game. But because they're less convinced, it probably won't go as high. Trader psychology talking here. If the market is absolutely convinced, it doesn't have to go on sale very much for people to buy it. Okay? Okay? Cool. So, Fibonacci says, if you get a deal and you're a bull, you buy the dip. Somewhere between 382 and 618. That's it. Couldn't be any simpler. Okay, so you measure the distance from here to here. We'll call that 100%. We'll call this a 382. We'll call this a 50%. We'll call this one a 618. Okay, next one. You measure the new high to the new low, measure out 382, 50%, 618. Okay? New high, measure from the low, there's 100%, measure out 382, 50%, 618. Now, the next part of this is the retracement helps you project the extension. Like I said, if it retraces all the way back to 618, it'll make a high, but not a huge high. If it makes a 382, there's tons of bulls in it, so it will make a higher high, a nice, solid higher high. So this one would predict, right, let's say a 1382 extension. So it'll go this distance plus 382 more. Okay, this one would go to 1382. This looks like a 50%. This could go from 1382 to 1618. It'll go even higher. And if this instead looked like, let me redraw this. I don't think I can delete it. So let me spend a second here and redraw this. I have to do it this way. It's kind of cheating, but okay. All right. So we go back here. This now is only a 382 retracement, which tells me there are lots of bulls aggressively buying at the first opportunity they could. So this is going to go up 161.8%. Because there are more bulls than this one, which only predicted to go up, right? Up 138.2. Okay. 786, no good. Very likely to be a reversal. Cool, isn't that nice? So, look, if you want to learn these techniques about trading, anybody can teach you. I can teach you how I taught myself, but there's lots of people that can teach you. Okay? I have close to 50 hours worth of videos at fxbootcamp.com. Okay? It's 76.4% discounted right now. Less than $400. I think it's $382 or something. Okay? If you want to learn this stuff and a whole bunch more like swing trading, day trading, fundamental analysis, trader psychology, it's all there. Less than $400. If you sign up for that, then it's going to upsell you and say, hey, while you're learning the videos, would you like to join the live trading group and hang out with people that are learning the same things as you, but also people that have been with me for 15 years and they're still with me trading as a group. Would you like to work with a group too? It's another $99 a month. There's the big sales pitch. 300 and something to get going. And then if you want to hang with me weekly to set up 300 pip trades, it's $99. FXBootcamp.com. There's the big sales pitch. If you'd like a broker that's trustworthy, that executes your trades quickly, that actually pays you on your swaps, okay? Tradersway.com. There's the big sales pitch. Boom, drop the mic. If you like the way I teach, get going. I'm going to pull the plug early this time. I got to feed the Porsche. So unfortunately, I got to go. So I'd like to thank FX Street for hosting me for 179 months for this one webinar. That's really cool. So I think what next month is, right? April will be 15 years, right? Do you know of anyone making money intraday using spot? Yeah, I mean, but you have to do it, Jim, you have to do it in the context of day trading. So like market open trading, you have to know it. Then the second thing is you have to know day trading. Then you have to know swing trading. And then you have to know position trading. And then you're going to incorporate carry trading, especially if it comes back. So like you have to know how to trade, Jim. There's no way around it. But only like skippity scalping, forget it. That's ridiculous. So you might make money, but it's a waste of time. You won't make big money. Okay? People that make big money have money work for them. Just think of it. It's been in every industry, in every economy, in every part of history. If you want to get filthy, stinking rich, your money has to work for you. Sitting at your desk, pissing around with 20 pip trades, I made 18 pips. Woohoo! You're spending all your time working. You work for your money, therefore, by definition, you are poor. You work for money. The definition of wealthy is your money works for you. And so, yeah, you can make money intraday trading, but are you going to make big money, feed the jet, private yacht kind of money? No. But it's better than digging ditches, which is also a form of poverty, right? Because digging ditches is hard work. Digging ditches doesn't pay well. And digging ditches as a career will probably lead to an early death. Same thing like scalping only, in my opinion. But a lot of people can do it good. Try it for 20 years. Yeah, that's where you just naturally... Now, I recommend people get really, really, really good at trading very, very short time frames. Okay? But there will be an inevitable maturity in your process as a trader. You will either blow up your trading account and return to being broke, or you'll make good money, but you'll find out it's just too much work. And being an entrepreneurial spirit like we all are, we'll find an easier way to make the money, which means you'll start incorporating more fundamentals, longer term charts, holding trades a little bit longer. And pretty soon you'll find out it's actually less work to make 200 pips on a trade than making 10 trades minus all your losses. So now it might be 20 trades that add up to 200 pips. You can just make one decent trade and make 200 pips versus having to make 20 trades, washing them all out, maybe making 200. Like, it's just easier to understand more and make better trades. Most people find more success when their trades are actually worth more. Okay? If your trades are worth less, then eventually they're worthless. No one will want to pay you for them. So you might as well learn macroeconomics, fundamental analysis, and be able to predict the future 3, 4, 5, 6, 7 weeks out, 3 or 4 or 5, 6 months out in advance. I'm already thinking about the end of the year. I'm already thinking about summer. I'm already setting up plans. I've already planned out March months ago. I knew dollar would get strong and what I'm going to do about it. It's already it's not in the history books yet, but it's all strategically planned. So therefore, if I'm right, my trades will be worth more, and other people with no plans will have trades that are worthless or worth less. Okay, obviously I'm doing the play on words. So you can dig ditches all day or scalp all day, but you'll die probably early and broke. Wealthy people have money work for them day and night. They wake up in the morning, they're already up 200 pips profit because they've been holding the trade for 3 weeks. They're like, oh, look at that, another 200 pips. Easy. They can do it while they sleep. Peace on earth. May the pips be with you. May your profits be above average. Thank you, FX Street. I'll see you at Trade Non-Farm Payrolls Live 180. Woohoo! See you next month. Have the best month ever. Cheers. I'll see you at fxbootcamp.com or at tradersway.com, right? By the way, I work with clients every day at Traders Way. Just become a client at tradersway.com, even a demo account.